Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, January 22nd, 2026, and here is everything you need to know as the markets close for today. Indian equities snapped their three-day losing streak on Thursday, delivering a broad-based recovery that wiped away mounting pessimism from earlier in the week. The Nifty 50 surged 132 points to finish at 25,289, up 0.53%, while the Sensex climbed 397 points to settle at 82,307, advancing 0.49%. Bank Nifty delivered even stronger performance, jumping nearly 400 points from its open to close at 59,210. The market reached its session highs well above these levels, with Nifty touching 25,435 and the Sensex pushing toward 82,783, signaling solid buying interest despite an inability to sustain the intraday momentum. The recovery was driven largely by relief over easing geopolitical tensions, positive Q3 earnings from several heavyweights, and renewed domestic institutional buying that countered persistent foreign investor selling. The Indian rupee also staged a notable recovery, gaining 15 paise from its all-time low of 91.75 touched yesterday to trade near 91.50 by day's close, a modest but meaningful appreciation that provided some relief to importers and market participants concerned about currency stability. On the individual stock front, Waaree Energies emerged as the standout performer with a stunning 9.67% rally, driven by exceptional third-quarter results that saw net profit jump 118% year-on-year to 1,106 crore. Revenues surged matching that pace at 118%, reaching 7,565 crore, while the company hit record module production of 3.51 gigawatt. Dr. Reddy's laboratories climbed 5% after beating analyst expectations despite headwinds, with the company's Q3 profit growth holding up better than the feared 20-22% decline that many had predicted. Among financials and public sector banks, Indian Bank jumped 6.18%, Bank of India climbed 5.60%, and Bharat Electronics added 3.69%. However, the day's most dramatic intraday move came from Eternal, which soared 7.33% in early trade on the back of a 72.88% surge in consolidated net profit to 102 crore for the quarter, buoyed by strong quick commerce revenue. However, the stock succumbed to profit-taking and closed down 2.79% as investors digested news of CEO Deepinder Goyal's resignation effective February 1st. On the losers' side, IIFL Finance plummeted 15.19%, PNB Housing Finance skidded 7.8%, Kalyan Jewellers continued its brutal downtrend, falling another 4.56% in its ninth consecutive down session, while Swiggy and Tata Communications fell 4.35% and 4.31% respectively, reflecting sector-specific headwinds and profit booking ahead of key earnings announcements. The broader market structure remained exceptionally healthy, with Nifty Mid-Cap advancing 1.34% and Nifty Small-Cap climbing 0.76%, outpacing the benchmark indices. Market breadth was overwhelmingly positive, with 37 out of 38 sectors advancing on the BSE, underscoring broad participation. The advance decline ratio stood at 390 advances to 107 declines, an impressive 3.64 times ratio that confirmed the underlying strength beneath the headline index moves. Support levels for Nifty 50 held firm at 25,200, with immediate resistance building at 25,400. Bank Nifty defended support near 58,600 and 59,000, with the next key resistance cluster emerging at 59,700 to 59,800 and ultimately 60,000 for fresh breakout levels. The strongest performing sectors were led by Nifty PSU Bank, which jumped 2.34% on optimism around improving asset quality and capital adequacy in state-owned lenders. Nifty Media climbed 2.39%, while Energy, Healthcare, Pharma and FMCG all posted solid gains exceeding 1%. Realty was the sole laggard, easing 0.17% as rate-sensitive property stocks faced profit booking amid elevated interest rate expectations. The sectoral rotation toward defensive and value-oriented themes, particularly in PSUs and select pharma stocks, reflected investors favoring resilience amid global uncertainty. Foreign institutional investors remain in selling mode for the day, with net outflows of 2,549 crore, extending their month-to-date selling to a net 36,591 crore. However, this weakness was more than offset by strong domestic buying, with domestic institutional investors posting net inflows of 4,222 crore. This domestic versus foreign divergence has become the defining characteristic of the market, where Indian money has consistently stepped into weakness, providing a critical buffer against broader declines. At the macroeconomic level, the rupee's recovery was notable, as it bounced 15 paise from yesterday's all-time low. This came on the back of easing geopolitical tensions following US President Donald Trump's clarifications at Davos, where he stated he would not use force to acquire Greenland. That single statement unwound much of the trade war anxiety that had gripped markets for the past few days, allowing risk appetite to return and the rupee to stabilize. On commodities, crude oil prices remained well anchored in the $63 to $65 range per barrel, with ample global supply supporting stable pricing despite geopolitical noise. Gold faced a sharp pullback on the same relief trade that supported the rupee, with MCX Gold declining 0.53% to around 1,52,055 per 10 grams, after hitting record highs of 1,56,610 just a day earlier. Silver also trimmed recent gains, closing at 3,19,672 per kilogram, up 0.37%, but well off its intraday record high of 3,25,602. Both precious metals are seeing profit-taking as geopolitical premiums temporarily ease, but remain well above levels from just a week ago, reflecting sustained safe haven demand. From a technical perspective, Nifty 50 has formed a high-wave candle with upper and lower shadows, resembling an indecision pattern that nonetheless leans bullish, after reclaiming the 25,200 zone. The index traded above all major moving averages, with the 200-day moving average providing a critical support floor near 25,100. A decisive push above immediate resistance at 25,400 could unlock a move toward 25,600, and the 100-day moving average around 25,590, with further targets at 25,700 to 25,900 if momentum holds. Bank Nifty similarly exhibits constructive structure, holding above all key moving averages and closing on a doji candle that indicates a battle between bulls and bears. The index must hold above 59,000 to maintain structure, with major support at 58,700. A break above 59,700 could confirm a move towards 60,000, where significant resistance clusters. For tomorrow's session, expect range-bound consolidation unless fresh global triggers or earnings surprises push directional conviction. Market positioning, with domestic buyers supporting weakness and foreign sellers continuing their cautious stance, suggests the market could oscillate within 50 basis point swings either side of current levels. Key catalysts to watch include further Q3 earnings, any reversal in FII flows, rupee stability near 91.50, and updates on geopolitical tensions, particularly any new statements from the Trump administration on tariffs or trade frameworks. The key takeaway for traders as we head into tomorrow is straightforward. The recovery today was broad and healthy, driven by legitimate fundamental improvements in earnings and sentiment shifts. However, persistence of FII selling reminds us that headline positivity masks underlying caution from overseas investors. For swing traders, the resilience of support at 25,200 on the Nifty and 58,700 on Bank Nifty offers attractive risk-reward entry levels on any weakness, especially as domestic money continues to show conviction. Watch the rupee closely at 91.50. A break weaker could reignite risk-off sentiment, while stability above that level supports the recovery narrative. Stay disciplined, manage position sizing, and remember that markets with strong breadth like today's tend to reward patient long positioning over the next few sessions. That wraps up today's market update. Thanks for tuning in to What Moved the Market. Send in your questions and thoughts to our show email, and don't forget to catch tomorrow morning's wrap for all the overnight developments and pre-market moves. We'll break down any fresh earnings, global cues, and technical setups to position you for the next trading day. Stay tuned for more comprehensive analysis, and we'll see you bright and early tomorrow morning. Happy trading!